500 as we get ready to trade the final few days of October 2022. Now, we do have October 31st, a week from Monday, a week from tomorrow, the 24th. And while that will be a trading day for the month of October, things will have started to settle already in November I think, as of Friday. So let's say we have through Thursday of this coming week to see trades that settle in October. And then Thursday and Friday and Monday, or maybe just Friday and Monday, will settle in the month of November. Okay, so let's see if there's a big change in behavior that starts to take place between Wednesday and Thursday, or sometime at the end of the day on Thursday. So keep that in mind. Let's start off looking at the intraday chart. And you can see that we have the 20-day simple moving average that has been holding support. We've taken a couple of looks below it, but for the most part, we have been seeing closes above it. Even though we've had some red candles in a row this week that we just traded, they still closed above the 20-day simple moving average. So I think that those red candles had more to do with call sellers who were in deep with October monthly OPEX, more so than it had to do with any bearishness. And you can see that we do have a pretty good line of support above 3650. So let's keep that in mind. The 20-day simple moving average on down to about 3650 needs to hold a line of support continuing on into this week that we're going into. We set our high for the week on Tuesday with a big gap up open, and clearly call sellers were waiting there and slammed it back down. And at the end of the day on Friday, once all those bets were taken care of, you can see that a rally took place once we got monthly OPEX out of the way. But at the end of the day, we couldn't make a new high for the week. Things rolled over a little, so maybe there still were some call sellers sitting there holding the fort down, keeping us from pushing through 37.65. So we need to see a push up and over 37.65 on Monday and make that support. If not, then we're going to maybe get a pullback once again to test the 20-day. And if the 20-day doesn't hold, test 36.50. When we look at our more simplified daily chart, you can see what I was talking about with these red candles in a row this week, followed by this huge green candle on Friday, because obviously on Friday's open we had monthly OPEX, and after that, maybe there were put sellers in control. But we couldn't make that new high for the week. And let's see if we get in here on Monday and kind of push out and over 37.65. And if we can, the next target really is ultimately the 50-day simple moving average, followed by the 100-day. If over the course of the next couple of days we do continue this rally and push through these two simple moving averages, the next target is going to be 4,000, and the right overhead, right above 4,000, is the outer edge of the bear fork that we've been in. That's going to start out around 40.25 on Monday, and as we get towards the end of the week, as we start getting into those trades that will be really settling in November, this line falls to the 4,000 mark or falls below 4,000. So we need to see a push out and over 4,000 and hold at some point this week. Otherwise, maybe we're going to roll back over and back test some of these hurdles that we've taken back, such as the 100-day and the 50-day simple moving average. When we look at our friend Apple, who is our indicator in the side view mirror, you can see that unlike the S&P, Apple put in 3 daily green candles in a row. But like the S&P, it broke out and it rallied on Friday, but it made a new high for the week. So if this is an indicator of what's really going on underneath the surface, we should see some continued rally next week on the overall market, and especially the S&P 500. A big indicator is going to be Apple making it through a 150 on a closing basis. That's a huge line in the sand for the stock. It closed at 147 and change on Friday, so we need to see a move up and over 150 and close above 150 and hold it for a few days. And if it can do that, it's going to help pull the S&P higher as well towards that 4,000 mark. And then looking at our roadmap, like I said, we've got to take out and hold above 37.65. That'll put us on a new high over the previous week, and on board to taking out the high for the month of October. And if we can take out that 38.07 mark and hold that, then we go on to our 50-day and our 100-day and on towards 4,000 and breaking out of that bear fork. Okay, so that's pretty simple stuff there. when we look at this. If we come in weak on Monday, maybe there's options hangover on Monday, which we sometimes see. Maybe we pull back and we test the 20-day simple moving average, and if that doesn't hold, test the 10-day and the 36.50 mark. Ultimately, we want to see Friday's low hold. Friday's low was 36.47, but we know 36.50 is our 80 handle rule level, and Friday's low was just a look below 36.50 in reverse. So we need to see Friday's low hold, even better still, 36.50 hold. And if it does, it's your second chance to buy calls and get on board a rally that could take us all the way to 4,000 before the week is out. Okay, that's it. I hope this video helps you out this coming week. As always, good luck and good trading.